Ethereum has decreased in value by nearly 40% recently, and it has been called many things: the next Bitcoin, a useful protocol with no real value, and a scam. I've never invested in Ethereum outside of a short experiment minting my own NFT, so I wanted to make two videos exploring the bull and bear case of Ethereum. This is the second video in that series explaining some of the fundamental problems that I see with the current valuation of Ethereum, which now has a market cap of over $280 billion. So I'm going to go over exactly what Ethereum is, my response to some of the more popular arguments for Ethereum's current value, and talk about how the price of Ethereum could crash by more than 50% over the next several months. But before we get too far ahead of ourselves, hey everyone, and welcome to FinTech. We talk about money, stocks, and other finance topics. On this channel, I've documented how I have more than doubled the value of my stock portfolio in the past 2 years, but that growth pales in comparison to the gains that some crypto traders have made. So this video series will hopefully help show both sides of the argument for why Ethereum might go up or down so that you can make your own judgment call. This is the second video in the series, so if you want to see the bull case where I argue why Ethereum could be worth as much as $40,000 one day, I'll link to that here and in the description. So hit the like button if you want, and let's start by looking at what Ethereum actually is. Ethereum is a blockchain, and just like other blockchains like the Bitcoin network or the Dogecoin network, it has a cryptocurrency that runs on it called Ether. A blockchain is essentially a decentralized network where no one organizing institution can control it or the transactions made on it, making it really good for transactions that you wouldn't want to be able to modify, like transferring money to somebody else in the form of cryptocurrencies. But if that was all that Ethereum did, it would just be identical to Bitcoin, the original cryptocurrency. In reality, Ethereum can be used for a lot more than just the Ether cryptocurrency. Multiple other applications and assets are built on top of the Ethereum network, including NFTs and other decentralized apps or dApps, ranging from games to collectibles. Ethereum has greater flexibility than, say, Bitcoin, making it actually useful for applications that can use the blockchain and not just for the Ethereum cryptocurrency. That differentiation is going to be key going forward. The Ethereum network is a useful protocol for running applications, while Ether is a cryptocurrency that powers that network. So setting aside the Ethereum network as a whole for a minute, let's talk specifically about Ether, because that's what people are investing in to sometimes become millionaires overnight. Ether is the reward system, the incentive that drives everything on the Ethereum network. You'll sometimes hear it referred to as the gas for transactions. For example, when I minted my own NFT, I had to pay to do so, and the money that I paid was in the form of Ethereum. The reason I have to pay Ether is because there are crypto miners who are in charge of verifying transactions before pushing them out across the network. And they only do this very processing intensive work of verifying transactions because they get paid. So in order to buy something with Ether, sell something, deploy an app on the network, anything that needs to be propagated out across the network, you have to pay for that in the form of Ether. So in that way, it's kind of like the gas that keeps the whole thing running. Now you might think that Ether would maintain a relatively stable price relative to fiat currencies minted by governments like the US dollar. But interest in cryptocurrencies as an investment vehicle rather than just a currency have led to skyrocketing valuations in many coins, including Ether. The real problem is, unlike with stocks and companies, it's really hard to say how much Ethereum should be worth. That's not to say there aren't a ton of explanations that try to peg Ethereum's value to something, so let's look at some of the most popular explanations and see if they hold water. So there are two broad categories which I would put for how people value Ether. One is the value that the blockchain creates or captures from existing markets, and the other is the number of users on the chain. So let's start off with the first one, the value created. In my last video, I showed a clip of an analyst from ARK Invest, owned by famous investor Cathie Wood, explaining how Ether could be worth as much as $40,000 one day.
Over the last 2 years or so, two use cases actually have emerged for Ethereum. One is this thing called decentralized finance, or what people call DeFi. Basically using Ethereum to do things that banks used to do, borrowing, lending, and things like that. Narrowly speaking, you could value Ethereum's opportunity in terms of the scale of the financial system if you just look at DeFi, and that's roughly speaking about $3 trillion a year. That's the amount the global banking and auditing system it generates per year, about $3 trillion. But yeah, like basically it's like if you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether.
In that clip, the analyst says that if Ethereum can take 1% of the global financial industry, that value would be transferred out of the banks essentially and into Ethereum, giving it a valuation of $40,000. The problem is, that makes a big assumption that the value would transfer into Ether. Just because a technology creates value does not mean it captures that value as well. It may just give that value out to its users. Let's say you hold a stock in a company, and that company invented a way for everyone to have unlimited food for free. Maybe they used that magic microwave from Star Trek. The company wasn't paid for the service, but they created immense value for the people who received the free food. There's an argument that Ethereum operates similarly. If Ethereum disrupts the financial system by converting more people to DeFi or decentralized finance, it's not clear how the value that creates through making transactions more efficient, removing banking fees, etc., gets transferred back into Ether's own value. If I own a stock in a company that gives away a free product, that doesn't make my stock any more valuable. Or for a different example, let's look at it like the US economy. If I had $1 before Facebook was created, and then Facebook ended up creating $100 billion in value for the US economy, does that mean that the $100 billion is distributed across all 300 million people in the country? Does that mean that everyone became $333 richer? If not, why would Ethereum creating $1 trillion in value make holders of Ether collectively $1 trillion richer? Now, I do think there is a logical response to that question, and it ties in with the next argument for why Ether increases in value. The more people who are aware of Ethereum and use it, the more valuable Ether will become. Supply and demand. Assuming the supply of Ether remains stable, as demand increases, the price will need to increase as well. I think that this is a completely correct perspective. As long as people continue to buy Ether as an investment to hold, the money that they put into the coin will continue to push its price up. That is different, however, from more users of Ethereum pushing the price up. Let's say more people start transacting in Ethereum, maybe by minting NFTs. Well, in that case, the price won't increase because for every buyer of a token, there is a seller as well. If you think of it like the stock market, increasing the trading volume of a stock does not increase its price if there is an equal number of buyers and sellers. It's only when there's an imbalance that the price goes either up or down. So what does that mean? It means that Ethereum's value could absolutely continue to increase, but the only reason it would do so is if people continually invest new money into the token. It has nothing to do with the value of the network itself or even the volume of people transacting it. All that matters is money in versus money out. And that is where we start to run into problems. If the price of Ether is only dependent on people putting money in or taking it out, there's no intrinsic value in the same way that there is with a stock. If I buy a stock in Google and its value in the stock market drops to zero, that's fine with me because I still own a piece of a company that is creating new money, and they can pay that money back to me in the form of a dividend. If I own Ether and it drops to zero, well, there's really nothing for me to get my money back from. Investing in this type of opportunity is not a new phenomenon. It's been happening for literally hundreds of years. In the 1630s, there was a period of the Dutch Golden Era when tulips became very valuable. People started buying tulips not for themselves, but because they could quickly flip them at a higher price. At its peak, a single tulip bulb could sell for the equivalent of 10 years' wages of a skilled artisan. This was the first recorded economic bubble. And shortly afterward, the bubble burst, and tulips that people had spent incredible sums of money on became effectively worthless. Now, that might be a bad example because, unlike with tulips, you can't just grow more Ethereum. Plus, Ethereum offers a technology that could and probably will eventually change the world. So when else have we seen a technology that could change the world draw speculators? Well, in the late 1990s, the internet was just gaining widespread attention, and companies started launching to address the completely untapped market. Companies like AOL and Yahoo are some of the most prominent examples. People knew that Yahoo's technology as a search engine could change the world, and instant messaging on AOL created huge value for its users. This resulted in traders trading up the stocks to sky-high prices, with Yahoo and AOL trading at valuations of $125 and $200 billion respectively in 1999 dollars. But while that technology would eventually change the world, it would not be Yahoo and AOL that did it. Those stocks ended up crashing completely as the companies were unable to keep up with their ridiculously high valuations, and people realized that just buying a stock simply because you could sell it for more later was not a sustainable strategy. Ultimately, companies like Google, Facebook, and Twitter ended up taking the technology of these early companies, improving it, and making huge amounts of money for themselves. Just because a technology will change the world does not mean that one particular instance of that technology will do so. Now, that doesn't mean that you can't get rich off of speculating on cryptos. Plenty of people will get lucky and do it. But it does mean that you can't create a system to explain how much Ether should be worth. So any guess you make on its price is really just based on what you can sell it to the next guy down the line. In the past, we've seen that this generally results in very unstable growth in prices, which can quickly enter bubble territory before bursting. In that case, the value could easily drop 90% when all but the most staunch diamond handers sell out in a panic. But who knows? Maybe this time it's different. So to be clear, I am a huge believer in blockchain technology and especially Ethereum. I am not a believer that this is a way to build wealth. I think that their full potential is still likely to be discovered, but we're seeing applications now on Ethereum in the form of dApps or decentralized apps and new inventions such as NFTs. This technology will doubtless create huge amounts of value just like the internet did before. But I would be extremely skeptical of thinking that that value will be reflected in the price of speculative assets like cryptocurrencies. So it may be obvious, but I have not bought Ethereum at this time. At some point in the future, if I want to gamble and essentially buy a lottery ticket, I might put some money in. But that money will not be included in my investment returns, and I will always plan for the fact that it could drop by 40, 50, or even 60% tomorrow. Now, I know that this video will probably get more dislikes than usual because it's kind of in a controversial area, but let me know if you invest in Ethereum, why you choose to do so. Don't forget to like and subscribe, and I'll see you next time.